What is legacy to you? A lot of people are thinking about their future and wondering, what legacy am I going to leave? Especially in a fiat driven system like this, it is it is terrible to see that people can work for 35, 40 years and then not have a legacy to actually give to the people that they love and that they care about, because every day, every week, every month, every year that while you're trying to build, it's being stripped away from you more and more by the amount of money that's being printed. I'll talk about my reference my parents again, who immigrated to the United Kingdom, did everything correctly, added value to the UK, and did what they thought was right, and that was invest in real estate, invest in an asset that unfortunately was touted as a scarce asset, was touted as an investment opportunity, but really isn't, right? Because 35 years later, they failed to beat the devaluation of the supply of property, right? More property was built, and they failed to beat the inflation of the pound. The amount of money that was printed was more than the value of the amount of money that went into real estate in the UK, and thus their property portfolio probably need to be worth 50 to 80% more to maintain the value with which it first started. So yes, if you invested in property, you're probably richer today than you were, but that's in dollar terms. As a percentage term of the percentage of the overall value of, or the overall amount of dollars or pounds or euros or whichever other currency that you're in, you're probably less well off, right? And what do I mean by that? It's very simple. If the entire money supply is worth 100 million and I control a million of that, I control 1% of the money supply. Now, if the money supply goes up to a billion, so 10x, but I control only $2 million, sure, okay, my pie, my the amount of dollars that I have has gone up and it's doubled from 1 million to 2 million, and I can feel rich about myself and I can afford a few more things. But really, it should have been $10 million to maintain the same percentage of control that I have. And you cannot do that in assets where a government or another entity can control the supply lever. Remember, with assets, especially when you're thinking about a legacy, because specifically a legacy, it's through time. This video is not really for anyone who's thinking about getting into Bitcoin because they want to get rich and blow the money before they die, because they don't believe in a future, they don't believe in having children, they don't believe in leaving anything, they don't believe in supporting their charities, they don't believe in anything else besides their selfish desires. And by the way, that's cool too, but this video is just not for you. This video is for people who have a sense of personal responsibility, whether it comes from within them or from God, about the world that they're going to leave for the next generation. That's what this video is about, because if you are that person and you are wondering and you want to leave a world or resources for the people who come after you to be able to lean on, to make more of an impact in the world, or just not even to make more of an impact, just to have an easier life than you did, well, then the question you need to be asking yourself is, where are those resources going to be held? Where are those resources going to be held? And the data shows us that people with under a $30 million net worth, roughly, let's say, $500,000 to $30 million, majority of that is inside of real estate. And that's a big problem, right? And by the way, it's not your fault. If you've been watching the last 3 videos that I put out, which I highly recommend, you'll learn that real estate has been the incentivized asset to put your wealth into, because it is a securitized asset and can allow the financial system to grow in a way that is a lot more stable than in something else that might be more volatile, right? Even though equities and things like that have done really well, real estate really stores wealth properly. It stores it quite nicely because it's not mark to market. You're not going to get margin calls all the time. Banks can lend out money for 30-year time periods in the USA and longer time periods, than average investments. And people feel comfortable borrowing against their home. For some reason, people feel more comfortable borrowing against their own home, securitizing their home, rather than actually securitizing an arm's length asset, right? People feel more, people think, oh, I'm not securitizing my home if I take a mortgage on it. That's exactly what you're doing. You are securitizing your asset and putting it in the hands of other people, but then you want to complain about the idea that people who are wealthier than $30 million typically have their wealth in equities and public markets, right? And bonds, for example. So every asset, if it's going to go up in value, has to become a securitized asset, because the very nature of securitizing the asset opens it up to the financial markets, which allows capital that is printed, money that is printed, currency that is printed, to go into it. If that's not the case, then it holds basic value. For example, real estate. In the U.S., right, the first 30-year fix was launched in 1934, I believe, or something like that. And even though it had mortgages on it, even though it was a mild form of securitization, property prices didn't really go crazy until the 70s. Why? Because that's when the first securitization of mortgages as a basket came in. Suddenly, financial markets could realize, wait a second, I can just trade mortgages. So I can take all this printed money, trade that I'm getting for an interest rate of, let's say, 1%, and I can just trade it in mortgages that are going to give me 7%. Like, of course I'm going to take that trade. So mortgage-backed securities and this, that, and the other, and other financialized tools came out, and that's when property prices started going through the roof. If you remember back, if you've lived that life experience, when in the 1970s is when properties in the main countries, right, the US, the UK, Europe, started going up in value. The reason why they started going up in value beyond the lifestyle premium of I just want to live in that house is because of the securitization of the asset. And again, as you know, if you don't know, you're about to know, and that is that Bitcoin is about to go through this securitization process because of the ETF. Right, the ETF allows institutions to lend on Bitcoin. It allows people to speculate on Bitcoin. It becomes an accepted financial asset once it becomes an ETF. Now, going back to your legacy, if you are someone who is thinking about the future, you're thinking about, what am I leaving this world? If you truly believe in your heart and your soul that you must leave the world better than you've lived in it, well, then the question you should be asking yourself is, okay, so which asset is going to allow me the time, which asset is going to allow me the breathing room over a period of time in order to make sure that the wealth that I've accumulated today can be affecting the world in 30 years, 40 years, 50 years. And that has to be a question. That is your legacy. Whatever happens in 30 years after you and I pass away is our responsibility today. And so you got to evaluate the asset from that perspective. Now let's have a look at what's going on with real estate, right? Real estate build qualities are getting worse and worse, which means they're not going to last. Why is that happening? Same reason why Apple got caught in a lawsuit trying to degrade the batteries or putting something in the software to degrade the batteries of the iPhones. So you buy more. Right? So people have figured out that you can do that. And so the quality of new build go look at an old built house. It feels like a damn house. This is going to be here for, 300 or 400 years. And now you look at them, they feel like cardboard, right? They feel like cardboard. So houses and new build properties and things like that, the quality of them is terrible. Then you've got taxes to take care of depending on where you are. You've got property taxes to pay. I've got a friend who lives in New Jersey. The property taxes alone on his home are $60,000 a year. Now, for those people in the U.S., this might sound normal, but for us that live outside of the U.S., that's a disaster, right? I have to pay $60,000 a year just to walk around my own house, and so. And again, we have taxes in the UK as well that are attached to property too, right? So you've got that issue. You've got the tax issue, right? Your property can be taken away from you if you don't pay that tax. It's just as simple as that. And then the question you've got to ask yourself is, can you trust whoever's going to come, maybe not the next generation because you've personally trained them, can you trust the third generation that comes after you? right? Can you trust that the lessons that you have learned to build the legacy that you have built will be protected and passed on to the third generation after you, right? And I don't think most people can. I certainly would be, I don't know if I'd be comfortable answering that question myself. I don't know how much I trust that, right? Especially with how stupid the world is getting now. I don't know that I could trust just that part with the third generation. I think I need to set up a rules-based legacy that executes at a certain time to make sure, and then other people can just live within those rules, sort of like Bitcoin, right? We live within the rules of Bitcoin. So you've got the tax situation that's an issue. You've got the fact that property is built like shit nowadays, right? You've got the fact that interest is changing. Look at geopolitics around the world. Everything is moving. Everything is moving around the world. What makes you think that in 50 or 60 years, even though I believe that the USA and the UK will reign supreme out of the situation that we've got going on right now in the world from a geopolitical perspective, what happens if it's not? What if the power center is in Asia? So what happens with your legacy that you think is going to last for a long time, that, all this property you've built up, but because you can't pick it up and move it to Asia, suddenly all that work goes down the pan, and you're in 2 or 3 generations time, depending on how far we're looking, you're back to being a pauper. People belonging to your last name are back to becoming a pauper because you chose to choose an asset that has a fixed location today. Imagine how crazy that is. This is what most people have been facing. Most wealthy families have gotten extremely lucky because they've lived in this time period where they've accumulated real estate and they've been able to pass it on, and their grandchildren or whatever have been able to profit from the rise of America and the rise of the United Kingdom and the rise of Europe. But what happens in a few more generations? So the question is, do you care? Do you care about that? Do you care about the fact that if geopolitics changes, your last name could mean nothing? Do you care about the fact that if geopolitics changes, which is never in your control, the fact that you can't move your wealth, the fact that you have to rely on the fact that someone in the third generation after you is going to have to be smart enough to foresee everything that you have foreseen up till now and move that capital? Do you feel comfortable with that? I don't. I don't feel comfortable with that. I want my capital to be able to move anywhere in the world, wherever the action is. I want my legacy to be able to move anywhere in the world where the action is. Now, the next question you have, of course, is what about if how many families nowadays have arguments and break up because the second and third generations break up because of how we're going to split these assets? Do you have a rules-based legacy plan that allows you to make sure that the number one thing that you're doing this for, which is your family, stays together? Right? Can't do that with real estate. What if one of your progeny wants to move to the other side of the world? What happens? Right? Let's just imagine you've got 3 children, and one of them wants to move to the other side of the world, but one of them has a property here, but they have a property in the United States. What happens to that? Are they going to be paying attention to that, or are they going to be focused on what they want to do? And here's the final question. Do you care about the desire with which your future progeny will be born into this world? Or do you just want them to have something? Do you care about the fact that this world is changing? Do you care about the fact that the average person changes careers 4 times by the time they're 40 now? Do you care about the fact that the wealth that you are accumulating may become a burden because it is not flexible enough to allow the people who come after you to stay adaptive in the world that's being created? The fact that we have AI now, right? The fact that we have technology that we've never ever thought about before. The fact that, AI can beat, a Harvard law degree by itself and grade it accurately. It's insanity. Do you care about the world, the fact that the world is changing and there might be a chance that the asset that you have chosen to protect the legacy that you have worked so hard for might be antiquated? Do you care that it cannot move fast enough? Do you care that it is not part of the future? Do you care that it is overbloated because of an overbloated financial securitized system that has come to an end? Because here's what will happen with the financial system. Yes, your houses or your houses that you are putting this moniker of a legacy on, the financial system will squeeze the utter juice out of it, and then it will go back to being exactly what it is, which is a lifestyle choice. That's what a house is. A house is supposed to be a lifestyle choice. The fact that the average person nowadays, 20 to 30 years old, can't even afford a house is ridiculous. That's because of the ills of the financial system. And what happens when governments realize that if we don't make it possible for people to afford houses, they're going to vote us out? We cannot let the peasants revolt. We cannot let the peasants revolt. And property will take that hit, because you must have a roof over your head. You must be able to get a roof over your head, because if I can give the majority of people a roof over their head, they're going to vote for me. Look at the geopolitics. Look at the national politics that is all centered around property prices. And now that financial system has another cherry to pick, has another cherry to pump up, and that is called Bitcoin. One that, by the way, I can buy one Satoshi, one part of a Bitcoin. I don't need to buy the whole Bitcoin, which means it's infinitely more scalable than real estate. Because if somebody wants to buy a house, they're going to buy the whole house. With Bitcoin, I can buy 500 Satoshis, right? If I want to put it through an ETF, $30 a share. I can get involved in that. Whereas a house, you actually have to buy the whole thing. So now the financial system realizes, wait, I can securitize this asset known as Bitcoin. It's absolutely limited, which means all of this wealth is going to chase it, and it will have a much more higher multiplier effect than real estate over time. And I can print a bunch of money and dump assets into it. By the way, if you've got this far, I want you to subscribe to the channel, because these are the things that I believe people need to think about when it comes to the future of what's happening here. This is the type of thought process that needs to happen. And this is the type of conversation that we need to have about Bitcoin, because this is the type of conversation that gets people to act. So please subscribe to this channel. It's extremely important so that the YouTube algorithm gets spanked enough to put this out in front of people, because it's not just you and I. You know how many people out there are thinking about legacy? You know how much my parents sacrificed just to be able to try and guarantee a solid future opportunity for me and my brother? You know how much they've done to try and protect that? And now they've just come to the end of an asset. They've come to the end of an asset cycle, and they don't know it. Well, now they do, because they have me. But most people don't know this. Most people think that real estate's just going to go up forever. You know why? Because of the Wall Street lie. Everyone needs a house. Everyone needs a house. Wall Street has absolutely lied to you and to everyone, because they have told everyone that everyone needs a house. So, what do we do with that? Well, my solution is find an asset that can be divided into as many parts as humanly possible. So I can buy brick by brick. You know, and a lot of people were trying to come up with this fantasy of fractional reserve ownership on houses, etc., etc. And I just don't think that's going to work because of because of the first point that I mentioned with real estate, which is the supply lever can be controlled. So you have to find an asset that can be bought in parts, can be separated around the world, an asset that can move around the world at the speed of light, an asset that is more finite than anything else in the world, an asset that has programmable rules that other people like governments and elected officials cannot fuck with, and an asset that can move with the time. And there is only one asset that can do that, Bitcoin, because of its finite scarcity and its adoption curve that it's on. Remember, if you're sitting there going Bitcoin is too risky, if you're sitting there going Bitcoin is not proven, if you're sitting there going, Bitcoin's too volatile, the single biggest asset manager in the entire world has applied for an ETF. That is BlackRock. BlackRock's approval process, approval ratings when it comes to ETFs is 576 applications in total, with 575 approvals. That might be one out. And the one that they got denied on, by the way, the whole industry got denied on. So at some point in your life, if you have a legacy to protect, you had to read some tea leaves. You had to realize that, maybe property is the right thing, or maybe stocks are the right thing, or maybe gold is the right thing. Something told you that, and you still have that ability inside of you, which I know a lot of people like to make people think that, you don't have that ability inside of you because you don't know what you're doing. Mark my words. I know that the majority of people watching this, video right now, the one that this specific video is relevant for, are going to be 45, 50 years old plus. And for you, I don't care what anyone says. I've said this since 2021. All of these young people can go on about their Bitcoin and their trading and all this other stuff. It's going to be older people who end up getting their hands on the Bitcoin because you have one thing that young people don't have, and that is patience. You have the patience, once you understand something, to actually sit through it. You have been trained. You have been conditioned to do this. And yes, it might sound scary right now, but let me tell you, at one point you had to take a risk. At one point you had to realize that if I want a better future for myself and my children, just like my parents had to, I got to invest in property. I got to invest in equities. I got to do something. I got to work hard. I got to put my money away. I got to do this. That is the fire that is needed right now, because otherwise what will happen is your wealth will continue trending downwards as a percentage of the overall money supply, because real estate is completely juiced out. There is no reality on earth where real estate can grow for the next 50 years like it has for the last 50 years. Absolutely zero reality on earth. Every single person will be completely priced out of all real estate. So here's what I predict will happen over the next 50 years. Prime real estate will continue to trend upwards, because the people that learn how to pivot their wealth will still need a place to live. And I believe that normal single-family homes, multi-family homes, etc., apartments, not the special ones, will continue to stay stagnant. People will want to live in the prime real estate in the prime assets, the prime buildings, number one Hyde Park, right? Whatever it is in Central Park, all those prime assets, beachfront real estate, etc. That will stay completely relevant. Everything else will start trending alongside inflation. And that is awful, because as you already know, if you've been watching my videos, the inflation numbers are not the same as the amount of money that's printed. So you have a choice to make at this point. If you are, and if you have felt really, really safe and really, really emotionally connected to your property portfolio, I need you to tap into, I don't need you to do anything actually. I would implore you to tap into that first moment where you realized that real estate was the thing that you needed to do. The moment before you had any real estate. The moment where you were given real estate. Whatever your circumstance was. Because whatever your circumstance was, you are here to protect that capital for whoever carries your name next. And if you do a bad job of it right now, they will suffer. So you need to tap into that energy when you first stepped into it and realize the world is changing, and there may be something to look at with Bitcoin after the single biggest asset manager in the entire world has decided to apply for an ETF. There's a lot of people with emotional connection to real estate, my parents included, which is why the way that I did it with them was to say, why don't we just refi? at the low interest rates that were around, and buy Bitcoin as a diversification from your real estate portfolio, and therefore stepping away from the reliance on real estate, and then we'll let the tenants pay for that Bitcoin. I'm not saying you got to get rid of your real estate. What I'm telling you is that real estate is not going to perform for the next 50 years like it has for the last 50 years. You don't even have to believe me. You just got to look at the data. Go value whatever house you're living in. Go figure out what it was worth 50 years ago. Take the compound annual growth rate and compound it for the next 50 years and tell me whether you think that's realistic or not. It's not going to happen. It's absolutely not going to happen. So the question that you're faced with is, am I a slave to my emotional connection, or do I still have it within me where I have that little bit of risk? I'm not saying it's a lot. If you've got $1 million property portfolio, one Bitcoin sitting at $40,000, talking about 0.4% risk profile. Even if the thing goes to zero, who gives a shit? But what if it doesn't go to zero? What if it becomes what BlackRock thinks it's going to be? What if it becomes what Michael Saylor has bet his entire company's future on? And by the way, these people aren't stupid. And the one thing that they've done, the one thing that they've bet on is that in a world where there is infinite amounts of money to be printed, scarcity will always win. That's what they've bet on with Bitcoin. That's what BlackRock's betting on. That's what Michael Saylor's betting on. And in a funny way, when you got into real estate, or when you were handed real estate and you understood real estate, that's also what you bet on. It's what I bet on when I was in real estate, because there wasn't enough buildings being put up and more people wanted them. We all have bet on scarcity, and right now Bitcoin is the scarcest asset humanity has ever created. And it's about to be securitized, and you're about to miss your opportunity as it takes an exponential leap up. So if you're in real estate right now wondering, how do I protect this legacy to make sure that whoever carries my last name next actually has something to carry, understand the 3 points that I've made over the last 3 videos. The reason why people invest in real estate, there's 3 pillars to it, I believe. Number 1, it's a physical and thus concluded a safe asset to rely upon and fall back on. Right? They believe it's physical, but that's the worst reason why. If there is no reason on earth why people have been investing in real estate, because it's physical. That's the lie that Wall Street tells you to keep your money trapped in real estate to take out more mortgages. The reason why people have invested in real estate is because it's a securitized asset that most people can have access to and simply understand with no margin call, right? Pillar number 2, why people have invested in real estate. It generates a cash flow reliably, and the return looks viable because of the non-mark-to-market leverage that's been applied, both in the form of capital and labor. If most of the people I've ever spoken to with property, if they factored in their own wages for actually servicing that property portfolio, the property portfolio would be in a negative. Most people I've ever spoken to. But you have applied a non-mark-to-market value to your own labor and think that your property portfolio is actually profitable. Most people would not be living with a profitable property portfolio if they actually mark to market the value of their own labor. Secondly, the cost of that capital is non-mark to market. So everyone thinks, oh, I don't have to worry about this for 5, 10, 15, 30 years. I can just borrow today, and that's the interest rate, and I'm set for that. That's the one valid point that real estate has, right? And thirdly, on the leverage point, I can put down only 10%. I can put down only 20%. I could put down XYZ% and generate some leverage. The most profitable real estate transactions in the world, long-term portfolios, have been done around the 30 to 40% deposit range. If you're sitting with a 10% deposit put down on a property portfolio, you are one bad move away from bankrupting that entire property portfolio. You have to have a certain amount of equity in the portfolio in order to make it work. But that is pillar number 2 as to why people think it works, because it generates this cash flow. And again, like I told you, people with up to 500,000 to 30 million believe that real estate is the best asset because it generates this cash flow. People with 30 million to a multiple billions, based on Charles Schwab's data, every wealth manager's data, they rely on equities and they rely on the market to give them that cash flow, which Bitcoin is about to step into. Bitcoin is about to become a cash flow asset as soon as it becomes an ETF and I can do derivatives against it. So, pillar number 3, this emotional connection, which is the one that we've been talking about here. Yes, emotional connection is very, very important. It is the asset that your parents did. It is the asset that your grandparents did. It is the asset that you have spent your entire life nurturing. But I'm here to tell you that times are changing. And if you don't pay attention to the fact that times are changing, all of the work that your grandparents, your parents, and you have put in will no longer be passed on. Because times are changing and you have to get smarter with time. And again, I will reiterate, I am not talking about selling your entire real estate portfolio and putting it all into Bitcoin. That's not what I'm saying at all. What I'm saying is stop being arrogant. Stop being scared. Find that part of you that took that risk to start with and realize that times are changing. The world's biggest asset manager is about to start marketing Bitcoin through all of its advisors. And you need to tap into that fearlessness again. Because if you want your last name to mean anything in 50 years, 100 years, 200 years, and you don't have prime real estate, you just have normal real estate, the risks are outweighing the rewards at this time. And you must lose that arrogance and start studying Bitcoin, because it is the next asset. And I'm not talking about starting with a 40% allocation. I'm talking about starting with a 0.4% allocation, or a 1% allocation, or a 3% allocation. My parents, whose average cost is around $10,000, what they'll find is that the second that Bitcoin surpasses $100,000, bear in mind they started buying in 2020, same year as me, just months later. The second Bitcoin passes $100,000, that 35, 40 years of effort that they've put in within a span of 6 years doubles the value of their entire property portfolio in liquid cash that they can move around the world with. They're no longer tied to the United Kingdom and its property taxation rules. They can move that capital around the world, change their residency, and pay the taxes wherever they decide to, wherever they choose to reside, and they're no longer beholden to the country that has let them down through the fiat system that subjugated every single person in it. That's the power of Bitcoin. That's what's going on here. That's why BlackRock's there. That's why Michael Saylor's there. That's why everyone is there. It is the most proven, hardest, scarcest asset humanity has ever created. And if you're in real estate, this is your fucking wake-up call to start thinking about this asset. But despite all of that, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.